This week I sat down with the recently appointed chief economist of Australia's biggest bank, the Commonwealth. It comes as the Reserve Bank this week cut interest rates with the expectation of at least another 2 rate cuts later this year.
I think there was a really noticeable shift in tone from the RBA at their meeting this week. We'd all expected, the markets had expected, and CBA had been predicting for some time that there would be a 25 basis point cut at this meeting. But the shift in tone was clear, and they've decided that they're much more concerned about the downside risks to inflation now than they were previously, and they've become more confident that some of the upside risks to inflation have faded. So we've now got inflation back in the target band, and the RBA really wanted to see the hard evidence, the hard data that inflation was going to come back into the band. And we've now got the trim mean inflation rate, which is the most closely watched measure of inflation for the Reserve Bank, sitting at around 2.9% annually. At a 6-month rate, it's even lower than that. So I think they're now comfortable that inflation has come back into the band in the way they hoped. They haven't quite declared victory, but I think Michele Bullock was quite close to that at her press conference this week. And she said they've now moved into a new phase where their job is to keep inflation in the target band, and they're more conscious of those downside risks to inflation from the global environment and also from the weaker than expected consumer sector at the moment.
So how many more rate cuts this year as a result of that then?
So we still think we'll see 2 more rate cuts this year. The arguments to keep monetary policy restrictive have definitely lessened, and so there's a case to bring monetary policy and interest rates back down towards more neutral levels. So we think we're going to see 2 more rate cuts over the course of this year. We're saying now that that will happen in August and September, which is a little ahead of our earlier predictions. But obviously we'll have to see how those international factors play into that debate.
OK, so the other part of the Reserve Bank's mandate is employment. And the unemployment rate at 4.1% is historically very, very strong. Isn't one potential concern that if you stimulate the economy by cutting interest rates very rapidly, the private sector demands more labour? If it demands more labour, that unemployment rate starts to go down, and at the same time, wages start to go up. Is that something the Reserve Bank has to watch?
They've been very cautious on that front. They've been highlighting that risk quite a lot during the past 6 to 12 months. My sense is they've become more sanguine in that space. They've become more relaxed. I think what they've been really worried about is, as you say, that do they need to increase unemployment more to get inflation back sustainably into the band? That's been the big question they've been asking themselves. And their previous view was, yes, we think needs to rise, probably more towards 4.25%, 4.5% before we can see wage pressures ease and inflation come back into the band sustainably. I think now when you look at the evidence, we have inflation back in the target band. We can see that in the data. Wages aren't showing any great signs of picking up. We still have a strong labour market, but inflation has been able to come down without stoking those kind of pressures that you're describing.
Can I just ask you one question on that? It was suggested at the time that Australia's strategy of trying to glide down inflation and trying to maintain full employment was almost unprecedented in central banks and governments trying to do this around the world. It's worked here in Australia. Does that mean they've changed the rules for central banks and monetary policy all over the world?
Yeah, it's very interesting. I think there was a sense of an experiment here, trying something a little different and trying to balance that effect between full employment and inflation. And I have to say, overall, you'd have to say that the Reserve Bank has done a good job of that. We have landed that narrow path at this stage.
And the government as well has to give credit for that, doesn't it?
Certainly the government's been part of that, but I think the Reserve Bank has taken a deliberate stance to try to take a slightly more cautious approach to preserve those gains that we've seen in unemployment. And it is quite remarkable to have an unemployment rate in Australia just a little above 4% at the end of a tightening cycle is really remarkable by historical standards and creates a lot of benefits for the economy going forward.
So for the Albanese government, it was a brilliant election to win because you're likely to get better economic growth as a result of the lower interest rates, and you're likely to still have full employment, which is filling up the government's coffers. So the outcome for government over the next couple of years could also be better than even the budget predicts.
Look, if you contrast the situation that the government and the Treasurer faced in their first term, when they came in, they had inflation rising, they had interest rates rising, they had a lot of cost of living pressures in the system, and that really dominated the term for them from an economic perspective. I think you're right that going into this term, they've got a cleaner and more positive foundation in the Australian economy. Growth is picking up steadily, but it is picking up. We've got inflation back in the target band, and we've got unemployment, as you say, at historically low levels. So that does provide a good platform for the government, but that doesn't mean there won't be some serious challenges that they've got to grapple with.
Well, the challenges they've got are productivity, which is running at decades-long lows, and the second thing is a decline in living standards. Now, no nation long-term, or no government long-term, is going to withstand people having their living standards going backwards.
Look, productivity is a key challenge, and you're absolutely right. When you look at the long-term trends, what matters for living standards is productivity. That's very clear. So there is a global trend towards slower productivity growth. We've seen that for a number of years. Australia is part of that, but we can certainly do more to make sure we are moving closer to that productivity frontier and helping to boost those living standards over time.
So just one thing on that. There's so much technology these days. There's so many robots out there. There's so many changes and things. All those things were supposed to improve productivity. But productivity, as you say, is going backwards. That seems a conundrum to me.
It's been notoriously difficult in the past to see some of those benefits of new technologies in the productivity statistics. That's been a long-running issue in the economic community. We can see it all around us, but we can't always see it in the data. I think that is going to be a positive for productivity going forward, but there's a whole range of other things that play into that. There's the regulatory environment, which needs to continue to improve and be more business friendly. We need to improve and speed up our planning and approval systems to help get some of the big projects away that we need if we're going to deliver our goals in places like infrastructure, housing, the net zero transition. So there's still some important things that we need to do, including some foundational things around boosting the quality of our education system over time and our skills and training system as well.
But all those things cost money. And the fact of the matter is that the government already has a warning from Standard & Poor's and from Fitch about the AAA credit rating. There's a decade of deficits and therefore mounting debts ahead of the federal government. The question is, how do you balance up those priorities, which, as you say, go to education, go to health, go, in fact, to defence forces in Australia? How do you balance all those things up with the fact that you've also got to try and balance the economy and balance that AAA credit rating?
Look, it's going to be a difficult challenge for the government over the course of this term. On the one hand, it's fair to say that when you look at Australia's fiscal position compared to other countries, we're in a good place. Overall, our net debt levels are relatively low, so there's not an imminent crisis there. But the spending pressures that you describe are going to continue to exert a lot of pressure on the government, and they're going to be hard to contain.
At some point, do they just let the AAA credit rating go? Stop holding on to that as some sort of a bonus that they need to really have it as a badge of honour?
I don't think any government is going to want to be the government that lets that prized AAA credit rating go. So I think it will be a driving factor over the course of this term in forcing the government to look at some hard choices around spending and taxation. But you're absolutely right that areas like defence and the National Disability Insurance Scheme, we know there are big spending pressures there that are going to be very hard to contain. I think the numbers that are in the budget now around the NDIS probably represent a best case scenario. It's going to be hard to deliver that. It's not impossible, but it'll be hard to deliver those outcomes. And so we know those spending pressures are going to grow. And on the revenue side of the equation, we're not going to see the types of big revenue upgrades that we saw in the last term that helped deliver some of those first two surpluses that the Labor government delivered. We don't think we're going to see those revenue upgrades again. So that does put pressure into the system. I think it's going to be hard to stop the debt position and the fiscal position from deteriorating. It'll be slow and steady, but I think there are going to be pressures there. And if the government doesn't tackle those, then the credit rating agencies will certainly be looking closely.
So then take me to one other issue, and that is this government has such a big majority now, it's got such a big mandate, it can pretty much do the reforms that previous governments have not been able to do or get through the parliament. Now, the question is where their priorities should be as they hit this next term of parliament.
Yeah, I think there's three things that are going to really dominate their thinking on the economic side over this term, outside of the structural budget pressures that we just described. The first one is the global situation. They're going to have to stay very acutely aware of what's happening globally with US trade policy. The relationship between China and the US is difficult. They're going to have to navigate that minefield over this term, and I think that will take a lot of their time and attention. The issues in the housing market in Australia are well known. It's the barbecue stopper in Australia. The government has a whole range of projects that they've thrown at that problem, but it's still early days. We haven't seen a lot of traction yet in helping to lift supply in the housing market, and that's going to be difficult to do. So I think they'll be very focused over this term in trying to drive new supply into the housing market, but that will be a difficult challenge. And then it's not getting as much attention right now, given what's happening globally, but the net zero transition is going to be a really important part of this term from a productivity perspective, but also from a growth perspective as well. They've set some ambitious targets for 2030, particularly around renewable energy, and getting those projects away, getting the transmission in place to support it, getting the infrastructure in place to support it is going to be very challenging and a really tough ask. So I think they'll be spending a lot of time in that space trying to get those priorities right.
Luke Yeaman, I'll tell you what, good to chat to you for the first time as the Chief Economist of the Commonwealth Bank. Many thanks for your time.
Great to be here, Ross. Thanks.